Good morning, I'm Tom Colley, bringing you the Phoenix Blue update for Friday the 21st of October. We had an interesting day yesterday, predominantly because of the ECB rate statement, press conference, etc. Let's have a look at that in a moment, but let's just go through the news for yesterday item by item. We had retail sales came in for the pound, which came in below forecast at 0%, so absolutely flat there. Retailers blaming that on the weather as usual, but certainly clearly not good for the pound in that respect. Then really the thing that dominated the whole day yesterday was the ECB minimum rate announcement followed by the press conference. We had rates held, and then Mario Draghi came out for the press conference. He obviously confirmed that they'd held the rate. The interesting things that came out of this were that the board or the committee hadn't discussed QE in any shape or form. They hadn't discussed tapering, or the official angle was that they hadn't discussed either of those items. Now, I'm sure that would have come to us, it did come as a surprise to the markets. We saw the euro bullish on the rates being held immediately after that, or as soon as the press conference started. But as soon as he started suggesting that they hadn't reviewed the QE bond buying or tapering of bond buying, the euro began to drop quite dramatically. Now, why potentially did that happen? I'm thinking that Mario's just as aware as you and I are of a potential rate rise by the Fed in December. The next minimum bid rate press conference is also in December for the ECB. In fact, it's the week before. I can't help thinking that he's keeping his powder dry, so that at least he's got something to offset that rate announcement when it comes. Not sure I can't say that's absolutely the case, but it would seem to explain why he was so categoric that they hadn't discussed any form of adjustment to the existing policy ahead of there being no meeting next month. So that obviously will be very, very interesting just pre the Fed, but I'm quite willing to suggest that we will see an extension to the QE programme announced, because that officially comes to the end in March, so we'll only be sort of 3 months away from that. If there is going to be any tapering of bond buying, I would expect that to be announced at the same time, but quite possibly there will be an extension to bond buying at the current levels, and an extension to quantitative easing in general, at least at the existing levels, if for a longer period, if not at increased levels. We also yesterday afternoon had the positive news for the manufacturing index from the States, and unemployment claims slightly disappointing that they came in over the forecast. But again, the dollar was already relatively bullish anyway. The data that comes through between now and the December Fed announcement, I think will have to be particularly poor to have a significant effect on the dollar. Overnight, we also had a very, very interesting speech from the governor of Japan, Kuroda. He was somewhat pushing back from their QE stance. He said that the Bank of Japan may push back the timing for hitting their 2% inflation target. To put that into more simple English, we're not going to hit the target we've originally set, so we'll move the target out. He also suggested that bond purchases may slow in the meantime, which would sort of constitute a reduction in the volume of quantitative easing. So that would tend to suggest a somewhat of a giving or a backing off by the Bank of Japan, maybe admitting that they are really struggling to weaken the yen in order to, or more importantly, to hit their inflation targets. Going into today, we've got Canadian dollar core CPI and core retail sales. That's all we've really got of significant news today. It is Friday. We saw some sizable movements yesterday on that euro news, so today potentially a profit-taking day, and a day for being cautious about entering new trades and potentially considering taking profits ourselves. Okay, here is the euro from yesterday. We saw, as I said, we saw a spike up as the press conference started. Nothing unexpected happening. Everything being as traders would have expected. And then bang, we got dropped with the no, we haven't discussed QE. Which I think came as somewhat of a surprise, to be as categoric as that they hadn't even discussed it. We would have suggested, the market would have expected they had discussed it and decided not to alter it at this moment in time, but that wasn't the wording, and for the reason I've said, that might be keeping their powder dry for next month to offset the expected Fed rate increase. Over on the US dollar, well, obviously we saw, this is the US dollar index, 58% of this is based on the euro, so basically we saw a euro move through here. In reality, it was a general dollar move as well. If you looked against other currencies, it was reflected, but in the first instance it was the euro that dragged the dollar longer. It's now reached what we identified as a key level at the weekend in our analysis, 98.50. We saw as a potential high or top, temporary top, short-term top for this market. Can't be quite as comfortable or confident that that would be the case now. We do have a commitment of traders alerts at this point that suggests that the balance between the longs and shorts on the commercial sides are out of balance at an extreme level. That has previously caused a market top, but obviously we have to factor in the fundamentals here, so we're aware of that when we'll be looking for confirmation before we can actually say yes, there is a top. But however, we have already today seen a reaction from that level. This is the second time I've taken the slide this morning. It was much more of a bullish bar with the close really at the high, and we've seen a pullback this morning, so I'd expect some sort of pullback on profit taking today anyway, but potentially we've got an intraday level here, but more significantly, this trend line wasn't broken yesterday on the dollar index when it pulled back in line with the long spike on the euro as the press conference opened. So it very much retained a very accurate trend line there. So I'll not be looking at this market as actually fully correcting until we break below that level, at which point then I've got two levels here that I'm looking at for potential reversals from. Preferred one would still be this down at 96.20 in confluence with the retest of the triangle. Whether we see that, obviously, we don't know. Over on the yen, now this was interesting because we had seen the yen pulling back. That's yen strength to the downside as the dollar consolidated prior to the ECB meeting yesterday. We did get the yen weakening, i.e. going long in this instance, as the effects of the euro announcement on the dollar came into effect and the dollar went long. But then we've had these statements overnight from the Bank of Japan Governor Kuroda, and they appear to have put a top on that in the short term. Again, we've got a nice trend line through here, and it hasn't broken. And again, I've seen that in the last hour or two this morning, turn from a bullish bar to a bearish bar. Obviously, this is the daily chart. We're not going to act on that, but it does suggest that those comments will add strength to the JPY, the US dollar yen exchange rate. So again, we can look down to these levels, but we'll be more cautious following those comments. And obviously, we want to see dollar weakness in order for that to happen. Now, at the same time yesterday, we got into a gold trade. This is a level that we identified again at the weekend as a major level. We've got a commitment of traders alert at this point. it is only an alert. It does mean to us that there is a possibility, there is a high probability. But with all things in trading, it's not an actual signal. It's not saying take a trade. We need levels, we need price action, and all the other things that we work into that to say that's a bottom. But we were looking for that bottom to come into effect. We broke long, we've come short, and at the moment, price is looking nicely to react off this intraday level there. Now, with gold, we do use bigger stops. We tend to put stops behind structure, unlike on FX, because the gold market is intraday much more volatile. We were at one point yesterday afternoon, it missed this entry by 3 pips or 2.5 pips. Went away and then came back, and obviously overnight it's come down to this intraday level. Target for this is around 13.05 at this point. Then we'll be looking at what we get from our commitments of traders. Potentially we will see further long side to this, but at the moment that's the target that we're looking at. Another trade that we're in, which is commitment of traders based, and this is something that maybe new traders out there or traders who aren't part of Phoenix Blue will not be totally aware of, and how it's used and what have you. We've had a COT extreme signal here. Again, that's an alert. It's telling us that this is potentially the bottom of the market based on the relationship with the commercial traders between their short and long contracts, i.e. their net position. We previously traded this market right back here in January, made some nice money out of there. We have had a couple of opportunities to trade it in the intervening period, but in commodities we like to trade the extremes. There actually hasn't been a top signal, but we had another bottom signal here, so we will trade that. So with commodities we tend to use the commitment of traders as being really significant, but we will be in and out of the markets, and it can be obviously trades can last for weeks and months, but also we can be out of individual markets for long periods of time. But as you can see, when we get in a move there, they can be really significant. Our initial targets on here are right up at this, also our secondary targets are right up at this level. I'm looking for first targets in around here, where we'll take money off the table around this initial high here. But as it's a commitment of traders signal, we do perceive that as being the bottom of the market as such. So in principle, we could keep trading this to the long side until we get a signal at the top, or a reversal from the market itself. Okay, that's one of the key things that you can pick up here from Phoenix Blue. Now we do, every month we do a 4-hour free trading session, which allows you to come and trade alongside our most experienced fund managers. It's 4 hours, it's absolutely free of charge. It's in central London between 2 and 5 p.m. It gives you the opportunity to talk to the fund managers themselves, to trade alongside them, to learn about how we do our analysis, how we combine fundamental, technical and commitments of traders analysis, and also seasonal analysis. You also have the opportunity to speak to maybe individuals who are more like yourself, in the earliest stages of their trading career or their trading journey, and they'll be happy to talk to you about how the way that we trade will help you take your trading to the next level, how Phoenix Blue look to provide you with the tools, with a flexible system where you can analyse the charts in your own right, develop the skills to trade the markets irrespective of what the markets do. We don't give you strategies that have been back tested within, over a 3-year period that aren't, there's no guarantee at all that the market conditions will remain the same. What we look to do is provide you with a flexible, adapting system that means you will always be able to take advantage of the markets irrespective of how they are moving. Okay, guys, that's it for Friday, the end of another week. It's been quite a successful week for us trading here at Phoenix Blue. We had some nice intraday moves out of the ECB meeting yesterday. I hope your week was successful. Trade a little cautiously today. Remember, it's Friday. There will be profit taking by the institutions, the banks and the major players. So a day for managing your trades potentially rather than heading into new ones. Have a great weekend, and we'll be back here with you on Monday. Thank you and goodbye.